Hey everybody.
Sean and Kelly here, Price and Price Group of Samson Properties, and what are we talking about?
Today we're talking about the five reasons that your realtor's brokerage matters. Whether you're a buyer or a seller, we're going to give you 5 reasons it matters to you, not just to your agent.
Yeah, all right, let's dive into this. Here we go. Okay, so I have something to say first.
I love when you have something to say.
So the first thing to understand is that ultimately, as a buyer or a seller, your agent is the one that is doing the work for you. The agent's brokerage is not going to buy the property for you. The agent's brokerage is not going to sell the property for you.
Oh wait, but what about the ones that they say, if we can't sell it, we'll buy it from you?
Those are the agents. Those are the agents
who have partnered with outside sources.
Not the brokerage. That's right. So it's very important to understand that for example, I'll go into a listing presentation sometimes, and I'll be talking to a seller, and they'll say, "Oh, I've already talked to somebody from Samson." The agents are completely different. The agent matters most. But behind the agent, the brokerage matters. And why does that matter to you? Well, we're going to go into those 5 reasons of how that brokerage can support the agent to better serve you, the buyer and seller.
Those are facts, but now that you got to say something extra, may I please say something extra?
Yes. Is it going to be about a remodel?
No, not this time.
Okay, go for it.
I also want to say that your agent's brokerage past also matters, because sometimes you find some that have maybe been in it 20 years and they've stuck with the same broker every time, and where that could be a good thing in some worlds of business, right? It's not always the best thing in this world, because every brokerage that an agent has been with, they've picked up what that agency has to offer. And I tell you what, if they've moved on from it, it's something they were able to learn, incorporate within themselves and how they do their business.
Yep.
But maybe they didn't necessarily offer the tools that they needed moving forward.
Yeah. So, or the advanced training, or the next level, or whatever that is. That's a good point. That's a very good point. Mine was more important.
Gold star. Oh wait, that's the heart.
Gold heart. Gold heart. So I had a point. Brokerage training. Anyway, okay, it'll come to me, I'm sure. Yeah. All right. So, this is what it was. So as we're going through these points, we're going to be mentioning a lot about our brokerage, and that's because currently we feel like we are with the brokerage that made the most sense for us. So we're going to give examples of what our brokerage does
and why it made sense for us.
Yeah, exactly.
And our background. Okay,
yeah.
So we started our real estate careers at Keller Williams.
Yeah.
And that was in Florida, actually, when we first started. And then when we moved to this area, we stuck with Keller Williams in Florida, and then we were with Long and Foster.
Yep.
And that was for some reasons, and we gained. And then we went
Keller Williams here.
Right.
Okay.
Keller Williams
Mclean.
Yeah. And got really wonderful things from there. And then when that didn't feed and grow us anymore, then we went to EXP, which grew us quite a bit, and now we're with Samson Properties. So so that you have our background, our history of where we've been and all of that.
Yeah, so that brings up to Kelly's point, how it's kind of fed us, and we felt like we hit the points where it was time to move to the next brokerage for the next level. So, okay.
So when we speak about particulars, if we do, it's because we know. And never any shade.
That's
never
true.
Any shade.
Never any shade. Everybody out there is doing the best they can and doing a great job. So
everybody is. Yes.
Okay, so the first thing is reputation and credibility. So I'm just going to take back a little bit of what I just said. Not necessarily, but
you said doing the best they can. This
is true. This is true.
Like I do the best I can with certain things, and it's not that great.
That's right. That's right.
It's still my best.
So how does the reputation of a brokerage affect the sale of your property or the purchase of your property? Well. As an example, if you use one of the discount brokerages that market themselves as a discount brokerage, number one, their agents, if it's a discount brokerage, that means their agents are the resources and the training and what can be put into the agents is not going to be very good. But also number two, whatever training there is, they're training them on the brokerage's model. So if the brokerage's sales pitch is, we get you a discount, how is that agent going to represent you in a transaction and protect your money? They're going to be a discount agent.
Yeah.
So that's one thing. And then plus the public will see that property. If it's a listed property, for example, there's a certain brokerage that as soon as this signpost goes in the yard, because it's a discount brokerage, that there's risk for the house, that maybe it wasn't maintained because the seller is now saving money on the brokerage. Maybe
Yeah.
they tried to save money on the house. So there's all kinds of reputation and all kinds of feelings that come into the brokerage that you use with that regard.
Yeah, and I want to just ask everyone to always apply this word that I don't naturally use in my regular real life. It's called logic. Okay? I'm not a
Amen.
naturally logical person, but you do have to take into account a huge amount of logic. So if your brokerage, they're telling their agents, hey, your main selling point is that you're really, really cheap.
Yep.
Well, that brokerage is also offering them like not a whole lot of
training.
things that we're going to go through
Yeah.
here. So they're not getting their training. They're not getting all of these other things.
Yeah.
And like their main selling point is being cheap. Now, I love a good McDonald's double cheeseburger, but I really can't eat it. And I'm not going to like take anybody there to impress them or anything. I really like, what is it? 801.
Tangent.
What Chop House?
Chop House.
Oh my gosh.
Oh, it's
in
best
Tyson's.
steak. Chop House and Tyson's, the best steak you will ever have.
Okay, I'm sorry, Ruth's Chris, and I'm sorry, Capitol Grill. You guys are awesome too. Even that porterhouse was good.
It was fantastic.
Okay, go there.
All right. Anyway, so back to it. So the reputation is very, very important. The public persona is very important, and it's important too, especially if you're a buyer. When you're putting offers in on a property, if a brokerage has a reputation for having agents that aren't well trained, then their contracts typically are not complete.
Yeah.
They're not compliant, and there's a lot of back and forth that has to happen, and the transactions tend to fall apart down the line.
Yes.
So it's going to weaken your offer just having a brokerage that does not train their agents appropriately.
That's true. And let's go in. What does this look like? Let's say a seller hired a discount brokerage, right?
Mm-hmm.
What does that listing look like? Usually, you, the buyer,
cell phone pictures.
Cell phone pictures, usually, yes. Also, as a buyer, you really. Like, we would not ever recommend you skimping on any home inspections or anything, because that means that homeowner has been, they're a skimper, right?
Yeah.
Now, I'm a frugal kind of girl.
Yeah.
But there are certain things you don't skimp on. And that is going to, it's not going to show well. It's not going to look great. And probably, like, once you start opening cupboards, and you might see a few friends in there that are not listed in the...
It's going to cost you more than the few $1,000s you think you're going to save on the commission and hiring a discount brokerage. It's going to cost you more than that on the transaction.
What does it look like if your buyer is represented by a discount broker? It means that when that offer comes across the the listing agent's desk, they're like, oh my God, really? We're going to have to like do all the work for them.
Hand holding and
And are they really well qualified? Do they really know what they're doing? Have they done all of this? And it's sort of almost a catastrophe.
Yeah. All right. So and
there was just a lot to say there.
There was.
You were bored with me.
No, I was just comfortable.
Super important.
It is super important, and it does in a way speak to the agent and the agent's personality. If they're going with a discount brokerage, it's because that's where they're comfortable. It's what their sales ability, their negotiations ability, negotiability. It tells you what their personality is and what they resonate with. So, okay. So the next thing is, and this kind of feeds off of what we were talking about, but number 2 is going to be the training and the expertise. And training is huge.
I was segueing into this.
Yes, it was beautiful. It was beautiful. And now this is something where it's almost this. Okay, I heard an analogy once when we were going through training in one of our companies.
Thrilled.
Yes. If you can take an airplane and you can make a paper airplane or a piece of paper and make a paper airplane and you can throw that paper airplane, that doesn't make you a good pilot. And that's the same as getting your real estate license, right? So you get your real estate license. It made sense.
I don't think that.
It made sense.
That's lousy.
Well, let me go with that. So when you get your real estate license, when you walk out, your ability to operate in the market and negotiate and know how contracts work is like folding up that paper airplane and throwing it. You're not a pilot. You have to train. You have to learn the contracts. You have to learn comps. You don't learn that in a license. So if you hire an agent, first of all, if you hire somebody who just got their license just because you know them, you may be costing yourself a lot of money. But if you go to a brokerage that doesn't train, that's a problem.
Right. And not to throw shite on new agents, right?
No,
because
not at all.
New agents can turn into really amazing agents. It's
and if they have a right brokerage, they can have the support.
They have the right brokerage, and they can always link up and partner with a seasoned agent. So that's always really,
good
really good.
Brokerages
We love new agents.
Good brokerages
agents.
have in-house training systems,
Mhm.
and they have mentorship programs where the agent has to do
Yeah.
transactions with an experienced agent to be able to move
Yeah.
forward.
And
So
here's something. I mean, we're not new agents, but our two brokers in our office are right down the hall. Like, if I can't tell you how many times I can be like, hey, Rob, like,
tell
I
us
got a
what's up.
question.
Yeah.
So that's super
Yeah,
important.
and the expertise of the brokerage, so, or the broker itself. So you have you have the brokerage, but then you have your principal broker that you go to.
Mhm.
That broker's got to know what they're doing and be able to answer these questions and be
And fight
and
for
fight for
your,
it.
you
Yeah,
through your agents, right?
and be humble enough and confident enough in their knowledge that if they don't know the answer, to admit that and go get the answer.
Yes.
So that's really important. So that training and expertise is critical,
Mhm.
because when your agent is representing you, they're representing you in the market.
Yeah.
And when that comes out there, if you have an untrained agent, then it's going to cost you a lot of money.
Yeah.
Yeah.
And
Next.
part of training is not being emotional, right? You got to know when to hold them and know when to fold them too.
That's why. Yeah, that's true. That's why you are working our contracts.
Yes. I do contracts.
And you do it extremely well.
I'm amazing with contracts.
Yes. Next is resources and support. So every agent, every brokerage, when they come in, especially on a listing presentation, they're going to sit down, they're going to put it down, they're going to say, we're going to give you access to over 300 websites across the world.
Yeah.
Every single agency brokerage has
They're
that. As soon as you put it in the
everybody does that.
as soon as you put in the multiple listing service, it goes to everybody.
Yes.
So the resources go beyond that aspect of it. The resources go to what's the back office support for transaction management, for communication, for maintaining the CMAs and maintaining all the details. So that the support is important.
It's huge, and like you're saying, the resources, that got me thinking. It's like one of the many reasons we moved to Samson is because we're able to send out so many more mailers with what they offer us to market our.
That's part 5. Okay.
Never mind. Skip. Okay. But yeah, I like everything you're saying about that.
So the technology does matter. Next is network and connections.
Yes.
So this is number 4. This is one of the biggest reasons, not the only, but one of the biggest reasons that we're with Samson Properties, because there are 14,000 agents, last count, maybe even higher at this point.
Yeah.
No, there's 6,000 agents, 14%.
Yeah, not 14,000.
I'm like, wait a minute, that's a lot. About 14%.
Like, wow, did it go up?
About 14% of the market is with Samson Properties, which gives our buyers access to off-market properties from all of those agents, and gives our sellers access to all of these buyers to test their pricing and test their marketing.
And so we went into this part in detail in another video, but I think you need to go into that a little bit here. Like, what do you mean? Test the market. What do you mean? So we're talking
about office exclusive listings. So when a seller signs a listing agreement with an agent and that brokerage, that agent has to either put that property immediately into the public eye, or they can market it for a short time, or totally to the brokerage. It's called an office exclusive listing.
Yes.
Most brokerages in this area have between 100 to 300 agents in their office. So that's the limit of their marketability when they do an office exclusive.
Right.
Samson Properties has 6,000 agents.
Yes.
So when we market a property, when we have a listing and we want to test our price point and test the marketability of the property, we do that with 6,000 agents.
Yes.
We get a good chunk of the market. From the buyer's perspective,
I love this.
Those buyers, when the seller's agents are testing their property, the buyers that work with Samson agents have access to all those properties for 6,000 listing agents.
There's no Zillow, there's no Realtor.com, there's no MLS, it's like not even on coming soon. No other agents outside of Samson will see those properties.
Yeah, so we are able to connect. We have software that allows us to connect buyers and sellers that match criteria, and a lot of times our buyers can find properties without having to bid for them. And a lot of times the sellers can sell a property without having to go through the hassle of prepping the property and having all the showings and the inconvenience of that. So
that's very true.
This is huge.
So amazing.
Yeah. So that's number 4. And then number 5 is marketing and advertising.
Yes.
We went through, every brokerage we went through trained us in marketing and advertising.
Yes.
Excellent training. None of them helped with it. But Samson Properties actually provides marketing for us. They provide mailers, they provide online marketing, they provide all of these things for their agents. That's a
Yeah.
huge support, and they do it. It's click and go.
It's
so
click it.
Yeah,
It's so easy. I mean, I make it prettier.
yeah, you do make it pretty.
I mean, theirs is pretty, but I make it prettier.
That's right.
But yeah, so whatever our budget would be for let's say a listing, and this is great. This is where logic comes in a little bit, right? So if we, since we're not a discount brokerage
Right, we're
and a
full service
discount
brokerage.
realtor, we are full service. So when we list a home, we have factored in the resources to be able to market your property within a certain budget. So we have a budget set. If someone needs to negotiate on that, like they think it's gonna sell, it's like, okay, then maybe we negotiate our fees a little bit, because we don't have to do that. But still, logic says that the more we spend, the more we have to make to do this, because people have to eat, right?
Yeah.
So Samson, because they offer so much for us in marketing, it's more than double what our budget would allow. So we're blanketing so many more people, so many more neighborhoods. And I can't tell you how many buyers we've had call on our listings from these mailers, right?
Yeah, and it just gets our sellers even that much more exposure.
Yeah.
And it's a fantastic opportunity. And from that perspective as well, the marketing, advertising, but also the resources and support, because Samson Properties is related to Cardinal Title, which is one of the largest title companies, we have access to transaction data, so we can tell our buyers, hey, last week, 45% of people got inspection contingencies. 55 didn't, but 45 did.
Yeah.
Last week, this is what the contracts look like. So we're
not getting like 30 and 60-day old data.
Yeah,
we're getting
it's like
it
7
now.
days exactly.
And the other thing about the other things we're allowed to offer is we get our home warranty, a home warranty for our sellers.
Get a free home warranty.
We've never had that with any other brokerage, but Samson, it's like anytime we get a listing, they automatically pay for a home warranty for our sellers. So if anything, any of the
major functional appliances or
it's
anything
covered. And that's no cost to our sellers.
Yeah, and so so these are some examples. Of course, you can go into a lot more, but your agent matters most, first of all, but the brokerage matters. It's a close second. It's a close second.
Your brokerage should make your agents better.
Yes, exactly.
Yeah.
And you can have a great brokerage and have two agents. One's great, one's not so great.
Yeah.
That can happen, but for the most part, you can that brokerage does matter.
Yeah.
Yeah, absolutely. All right. You got anything else?
I feel like I do. Like I feel like I have so much more.
Yeah.
It's just not right here.
Okay, we're out. All right. We'll see you guys on next week's video.
Bye. Hey everybody, it is time for this week's Market Snapshot.
Yay! Sean Kelly here, Price Group. What's happened in the Northern Virginia real estate market in the last 7 days in under 5 minutes? Here we go. So we're doing a little bit of a special edition because we're going to do our last 7 days, but then we're also going to do the monthly market report looking at the data from October. So
does it still have to be in under 5 minutes?
No. Well, the first part's got to be under 5 minutes, and then we'll get into the other one because I'll cut it out.
So 5 minutes.
Yeah. So the reason for the market snapshot is because this gives us leading indicators, leading data, so we know exactly what's going on in the market right now, so we can make real-time decisions. The monthly market report gives us a bird's eye view, so we can see trends and tendencies.
But even that monthly market report is more up-to-date data than they're getting like from the news.
Somewhat, maybe by a couple weeks.
Yes.
Yeah. It's still 60 days old, because if it's anyway, we'll get into that.
Oh, never mind.
Yeah.
I get to participate in this monthly market report. Let's see if he invites me back.
It's going to be
next
great.
time.
All right. So first, let's dive into the market snapshot. So tell us what's going on here, Kel.
Okay. So that squiggly black line there. Cut that out.
I'm not cutting that out. That's staying in here. You go.
So that squiggly black line there, that's the buyer activity. That's how many homes have gone under contract in the Northern Virginia real estate market in the last 7 days. The teal line underneath, that is the listing data, and that's how many new homes have come up for sale on the market.
That's right. So
and my look of confusion is, does that include coming soons?
No.
Okay, I ask that regularly.
Yeah, so the new listings are what is on the market. So that's the inventory, that's the supply. The buyer activity is the people that went under contract, like you said, and that's the demand. So we're looking at the supply versus demand. that tells us the strength of the market with regards to which direction is it going.
Yes.
So this was the election week. So this data is going to be skewed just a little bit. You can see that buyer activity just
Well, the
plummeted.
data is accurate.
The data is accurate. The trend might be skewed just a little bit.
Fair.
So you can see that buyer activity just plummeted over the last 7 days.
Like, what were you guys doing?
Yeah.
What's so big? What's such a big deal about the whole election thing in a way?
I don't even know. And you can see that also is kind of following a downward trend in inventory. So that helps contribute to that because there wasn't a lot of properties out there.
Is it true? Like listings actually kind of tried to come up just
they
a tiny
were
bit?
going down, but then on the inventory for election week actually went up just a little bit. So yeah, that's true. Which if you look to
They're
last
like, I'm outta here.
If you look to last year, the trend is it was decreasing even through that past week. So it's interesting it went up. Buyer activity is going to continue to decrease through Thanksgiving, and then we'll see it have a little bit of an uptick, and then it'll decrease for Christmas and then have an uptick.
But sellers, please, like we've got buyers saying, where are the homes, especially the like low 1 million. So
yeah, 100%.
Come on, if you're listening, don't hold off. Give us a call. We've got some buyers ready.
100%. So if you look over here in the strength of the buyer's market versus the seller's market, you can see because of that buyer activity that dropped and the tick up in inventory, that gap lowered. So the strength of the seller's market for election week did decrease, but it should pop back up and be back to the norm this coming week. Might actually be a little bit higher.
We're saying norm.
Yeah.
Okay, that's weird.
Well, the norm
just because it's become normal
Yeah.
that we're in a big seller's market. But take a look, that middle line there, that's not for fun. That normal market thing, that means it's an even normal market, neither buyer nor seller.
Yeah.
So normal.
Yeah, the normal seller's market that we're in. That's right, the trend, yes.
Yeah.
And if you look back at last year, you can see that there was a trend where everything stayed about this level, and then Christmas hit, or Thanksgiving hit, and then it started picking up, and then Christmas hit, and then we got into the spring market.
Yeah, you've got that burst of people who really want to be in that new home for Christmas. I really want to do that sometime. I've never gotten to do that. I really want to buy a house. Like in between.
We're getting close.
Like I want to move into a new house between Thanksgiving. This
would be so much fun. So for sellers, if you want to get out there right now, we did see an uptick in buyer activity this past week. We've seen a lot of competition, so I expect these graphs to move up. Demand is definitely out there. So sellers, it's a great time to list.
I demand to do that one day, Sean.
Buyers, you got to get in now before we hit the spring market because it's going to be crazy when the spring market hits. Yeah. All right, see you guys next week. But now we're going to dive into the monthly market.
Okay, everybody, we are back again with this time the market snapshot, but it's for the
monthly edition. So this is the November market report, and we're looking at the October sold data so we can see the trends. Here we go. All right, so this is our weekly market snapshot that we just finished up with. So now let's dive into the monthly numbers.
Ooh, I've never seen this.
You had, we saw it last month.
I didn't do this with you, did I?
You saw it 2 months ago. You're right. I did it last month.
Does it look different?
No, it's the same.
It looks good, honey.
Well, thank you. All right, so we're going to look at some data now. Again, the purpose for looking at the monthly numbers is because it gives us an overall view of what the trend is in the market. Are we looking like we may be moving into a seller's market or a buyer's market or changing? The important thing to remember is that this data is sold data, so the actual market activity that occurred was usually about 65 days prior to the sold data. So for the month of October, we had...
Because the under contract, from the time you go under contract to the time you actually settle is usually about 30 days.
Yeah, so settlement, under contract to settlement, 30 days. And then when it closes in that month, we wait to the end of the month to gather that data.
Oh, so
that could be... No, you said it. I was just adding on. Okay. It could be another 30 days plus about 2 weeks to let the data get into the MLS. So we're looking at 45 to 60 days. No, we're looking at 60 to 75 days. Whatever the math is.
It's a bunch of baloney. I don't even know why we're looking at it.
For the bird's eye view. That's why you listen. Okay, you ready?
Yeah.
Oh, you don't get to talk about the... Anyway.
I don't get to talk about anything.
All right.
Why am I even here?
I'm sure you will.
I'm going to go. Peace.
Get over here.
I got work to do.
Get back over here. All right. So the number of new listings for October 2024 was 1,020. October 2023 was 963. So we were actually up 6% from 2023. So inventory was up. But the number of sales was 984 in October versus 882 in October of 2023. So it was actually up 11%. So while inventory did grow, and that's what we're seeing a lot in the media, that inventory is going up. So, hey, maybe sales prices are come down. Well, the actual fact of the matter is, as inventory went up 6%, sales went up 11%. So the
No
sales,
bueno on that then.
not for the buyer's market coming in. Next, we have not for a buyer's market to come in, not for the prices to come down.
Oh, right.
Yeah,
Okay.
yeah.
I didn't know what you meant by that.
Making sure
I've paid attention.
So days on
I'm
market,
gonna lock in.
October were 20.
Yes.
Same as September. They were 2 days longer than what was in October.
Of last year.
So we are seeing properties. It's not uncommon for a property to go into the second weekend before going under contract right now. So that's
that
not
has
surprising.
been a new thing.
Yeah. Months of inventory. So this is our absorption rate. And what the absorption rate is if you took all of the inventory that's on the market right now and that sold through at the current rate of sales, how much inventory would we have before we ran out of inventory altogether? And right now it is at 3% or 3 months. The common belief is that between 5 and 6 months is normal. Anything under that 5-month range is a seller's market. Anything above is a buyer's market. So we're at 3 months.
Above what?
5 to 6 months. So 3 months in October of 2024, 3 months in October of 2023. So we're still in that seller's market with regards to that. No change from last year. Median sales price. October 2024, our median sales price is right here. I don't have the number, but it's like about $735. October 2023, it was in the 6, 7, high 6s.
What do we say?
Now's the time to get in the market. It's time in the market, not timing the market. So that's an 8% increase of October 2023 to October 24.
Equity is what that means.
8%
if you had
equity.
purchased last year this time, that would be 8% equity.
$1 million house, that's $80,000 in equity. And this is for Fairfax County specifically. So, yeah, 8% increase. All right, next, median house price. We go through that every month, so we're going to skip that this month. So what was the list price to sales price ratio? This is important just to see kind of what the trends are and how sellers are pricing properties. And you can see in October, it was just above 100%, right around 101%. Okay. So it was the same as it was in October of 2023. So got much more reasonable than it was in September.
That was crazy.
We were like 118%. It was ridiculous.
So your graph makes it look crazier than it actually was. Like it looks like it was like 250% times the asking price. What? That's what that graph makes me think.
That's not my graph. Wow, it's Bright's graph.
Oh, I thought you did that.
No. I mean, I pulled it.
I mean, it's good.
Yeah.
Well, this is one of my favorites.
Yes. So what's happening, basically what I just went over is that we are still in a seller's market. We're not trending towards a buyer's market. We're trending towards a little bit more time on days on market. But as far, and we are seeing that some buyers are getting their some more contingencies, like inspection contingencies and things like that. So it's good time for the buyers.
Also, our VA offers are getting accepted more.
Yeah, and we've had a couple VA assumptions.
Yeah.
So yeah,
that's been really. I'm really happy to see that.
Yeah. So and for those of you who are waiting for the next market crash to come, we like to show this graph. This is since 1940. There has not been a single decade where there has been a net loss in property values. And there's only been 7 years where the property value actually went down. Some of those were negative 1%, 4%, 4%. Here is where the big drops happened, and that was in 2007, 8, and 9. That was during the market crash. That was caused by the real estate industry. So if you're waiting for a huge crash to come back and make up for all these prices and get back to pre-2020 pricing, it's probably not going to happen. History says it's not going to not likely to happen. So we can't tell you what's going to happen. We don't have a crystal ball, but you can use historical data to try to predict, and it just doesn't look like we're going there.
Yeah.
Okay. We may see appreciation flattening, where it's not going up as fast, but that flattening appreciation does not mean depreciation.
Yes.
Okay. Guys, we'll see you guys on next month's report. Bye.
Everybody, it's time for this week's Mortgage Minute with Tatiana, I believe, Lopez from Prosperity Home Mortgage. Hello.
Hey. Hey, Tatiana.
Hi guys, how are you?
Good.
Doing good. We're about to find out if we're better or worse. Are you nice or naughty, or are you just kind of like floating?
I'm not wearing any hats today.
Yeah, I was just saying, she hadn't had a hat on.
I'm just neutral today. Let's see what's going on. Gonna be like this, a little bit of difficulties as always. Okay.
Yeah.
Yep.
So as you can see right here, the rates are pretty flat, right? So comparing to last week, 6.97% for conventional. FHA government loans, they're a little bit better, 6.5. Jumbo is a little bit better today, 6.88. So yesterday, U.S. Bureau of Labor Statistics released the October Consumer Price Index, CPI. That's a key that measures the inflation. And the report shows that inflation has followed expectations, meaning that Fed will likely to cut the rates once again in December. So, but even so, the mortgage rates will probably remain high due to speculations and volatility until Trump becomes the president and if they start implementing the policies. So at this point, I think rates are just gonna stay as high as they are. And if someone wants to buy right now, it's gonna be the same for a few months.
Yeah.
Okay.
So those
Okay.
are the expectations.
And let's keep it in perspective, high for what we've experienced recently, but it's kind of in that normal range, just to kind of keep that.
Exactly. High meaning like in high sixes.
Yeah. Yeah. Okay.
A little bit higher comparing to a month ago. Yes.
Yeah.
Yes. Yes.
Okay, but I always do like, especially in our market with where we have the price points that we have, I'm always interested in knowing what the conforming is, or the conventional rather versus the jumbo. And they kind of like do this bunny hop thing where sometimes the jumbo is better and sometimes it's worse. And I think that's really interesting.
Yeah. But I have another bonus slide for you. Those are the predictions for the interest rates in next year. So as we can see, and I'm on a different screen, so I apologize. So we have last quarter here, predictions are in 6.5, it's actually a little bit higher than that. And then you can see that they all pretty much close to each other, and it's red is Fannie, purple is National Association of Realtors, yellow is Wells Fargo, and gray is Mortgage Bankers Association. So they all predicting the rates to be in sixes.
Yeah.
First quarter of 25. A little bit below 6 in second quarter and third quarter and fourth quarter. So the rate's probably going to be in mid fives per their predictions. So we'll see.
Okay.
And they all kind of seem to pretty much agree.
Yeah. They all in agreement.
Yeah.
Hopefully this happens, because weren't we predicting the same, or not weren't the predictions the same thing for the end of 2024? That we were expecting kind of to be in the mid fives by the time everything shook out.
Exactly.
Right. And I think this does buyers a huge disservice because it tells them to just keep waiting and keep waiting and keep waiting. And I wonder if the powers that be know we don't have enough houses for all the buyers out here. And so they're trying to get everybody to hold off as much as possible. These are just deep thoughts by Kelly.
You bring up a good point, though, because that's causing people to wait, just like people waited for the end of this year thinking it was going to come down. And we just did our month-over-month market report, and for October in Fairfax County, the appreciation was 8%. So $1 million house, that just cost whoever's sitting there waiting $80,000 in appreciation. I don't know if 0.5% or 1% on interest rate is worth $80,000. So buyers kind of have to make their decisions based on all the factors, not just the interest rates.
Exactly. That's why we keep on saying the same thing, and we're gonna keep on doing our job, telling people buy right now and refinance later, because you're gonna miss out on the appreciation. And just to your point, 1% or 0.5% is not gonna do much when appreciation is 8%. So it's better to buy and refinance later. It actually also holds, people don't want to refinance right now, waiting for better rates, even those that already have mortgages. And I have some clients with interest rates over 7%, and they don't want to refinance yet, even though they could get better rate, but they just want to wait. But in this situation, it's important for those who wants to refinance just to see, what the monthly savings are versus the cost of
Yeah.
refinancing, how long it's gonna take you to recoup this cost, and does it make sense for you to do it? That monthly savings, are they large enough for you to refinance, or you just want to wait?
Yeah.
Yeah.
You don't
Yep.
want to refinance a couple of times, so that.
Tatiana, I want to ask you this. This is a good segue into this. I just heard from a client that you're helping with her loan. Tell me, is there something that VA has where they will, if the interest go down within a certain amount of time, they'll automatically lower it without any fees or something? Can you help me understand that?
Well, so the VA has very good streamlined refinance process where we don't do credit qualifying. We don't look at income, credit, and we don't do the appraisal. So it's very minimal cost to the buyer. It's not automatic rate reduction. It's still a process. You still need to record the new loan, but it's much cheaper because we don't charge origination fees. There's not going to be qualifying bunch of documentations and things like that, and no
Okay.
appraisal done.
Okay. All right. Very good.
Makes
Yeah.
sense.
Yeah.
Okay. Anything else?
No, are you ready to move on to today's big topic?
Today's big topic.
Okay.
You announce this one. I can't speak.
Okay. So are you ready, Tatiana, for the big topic intro?
Always ready. Yes.
Okay. Will you please help us understand the 5 C's of credit as it pertains to mortgage loans?
All right. I'll be happy to. Let's see what we have here. So the 5 C's,
That's a great
as we
graphic.
know, can you see it well?
Yeah.
Yeah, awesome. So 5 C's, that those are the main pieces of puzzles, right? So that we look at when we approve a client. So we look at character. Character meaning, the credit, right? So have you successfully repaid loans in the past? How's your credit looks like? How's your credit score? What's your spending pattern, right? Are you able to handle multiple credit lines and not being late on them? So that's character. Capacity would be how much money you make, how much of the payment you can afford. Will this purchase help increase your revenue, or what's gonna happen when you have X amount that you make comparing to your mortgage payment, or other spending. So basically that's that to income ratio calculation, right? How much monthly obligations you have versus your monthly income. So that's capacity. The capital is the money. How much money you have to put for the down payment, for the closing cost. Maybe you might need to show even extra for reserves, not only what you need to bring, but not to completely deplete your assets. We might need to see extra money left over in your account, in some cases, not always, but some loans would require that.
Okay.
So, and then we have collateral. Collateral is, if first 3, character, capacity, and capital, were pertaining the client themselves or their financial part, the collateral is the property, because when bank is giving a loan, they have interest in collateral. So we need to make sure that the property also meets the standards and guidelines. We want to make sure that it's in livable condition, that there's no safety or hazard issues in there, that the client when they're gonna move in that property, they're not gonna, run out with saying that it's impossible to live in here, right? So we do look at collateral, and of course we do appraisal in most cases. We want to make sure that property value is at least the same as the sales price, so they're buying it in the market value. And the fifth would be condition. What is the purpose of this loan, and how is the, in general, what the terms are. We want to make sure that if buyer is purchasing it as a primary residence or investment property, there are different terms and different conditions could apply to that. And, in general terms, that's something for the borrower also to understand. Is it going to be 30-year fixed, 15, 20? Is it going to be fixed loan? Is it going to be adjustable rate mortgage? What type of loan it is? So those are our 5 C's.
Okay, so condition is more like, what are the conditions of this purchase?
Like terms, maybe.
What is the condition of the property, right? So it's not like your home inspection or anything like that. It's the conditions of the purpose of the purchase.
Exactly. So the conditions of the loan itself, but those inspections of the property, that would fall into the collateral, the force.
Okay.
And then character is not a person's character; it's a person's financial character.
Yeah.
Exactly. Yes.
Yeah. Like if you see very little like Amex cards, but you see Ulta and DSW and Best Buy, it's like, well, I think they like really shop and really like cave to those. Would you like to apply for our credit card? Which, by the way, I have always said no to those. Always said no, no, no. And then there was one of these info things we did, and I think you said that like showing one revolving card, like so that you can totally encompass the breadth
all of the categories.
You're like that can be a good thing. So
that's where that came from.
That's what an ultimate
I'm like, what in the world? Why do we have
mask that they sell that actually you and I both use?
Yeah.
And I would get it like once a month, and I was there getting our face mask, and they asked me, and I'm like, and I thought about you. Tatiana said yes, so yes, please.
I hate to burst your bubble, but we already had Home Depot.
That's right. Home Depot doesn't count. Home Depot
like, it does count.
It's my baby.
Oh, all right. Well, thank you for that. That was very informative. And I've often wondered, we always tell people during like the buyer consult that it's the buyer and the property that have to qualify, but having that broken down into the 3 aspects of like what does the buyer mean, like
and then the 2 of the
property. Yeah. So that was interesting. I like that.
Yeah, I love it. Thank you as always.
You're welcome.
All right. How can people get in touch with you if they need you?
You could just call me 571-245-3000.
All right. We'll see you next week.
Bye, Tatiana.
Bye.